Thank you for watching. This video is for educational purposes only and is not financial advice. Why you need to understand gold? Gold, it's a word that evokes images of wealth, prosperity and security. For centuries, gold has been a coveted asset, prized for its beauty and its ability to hold its value over time. Even today, in our modern world of digital currencies and complex financial instruments, gold continues to hold a unique allure for investors. But why is this so? What makes gold such a timeless investment? Gold is a tangible asset. Unlike stocks or bonds, you can hold it in your hand. This tangibility gives gold a sense of permanence and security that many find reassuring, especially in times of economic uncertainty. Moreover, gold is a finite resource. There's only so much of it in the world which contributes to its intrinsic value. Throughout history, gold rushes have driven people to the ends of the earth in search of this precious metal. Ancient civilizations, from the Egyptians to the Incas, revered gold, using it in everything from jewelry to religious artifacts. Today, gold's utility extends beyond just wealth storage. It's used in electronics, medicine, and even space exploration. Its conductivity and resistance to corrosion make it invaluable in high-tech applications. In the financial markets, gold often acts as a hedge against inflation and currency devaluation. People buy gold not just as an investment, but also as a way to preserve their wealth across generations. With the advent of gold ETFs and other financial products, investing in gold has become more accessible than ever. Yet despite these modern conveniences, the allure of physically owning gold remains strong. The craftsmanship involved in creating gold jewelry adds another layer of value, blending artistry with investment. From the domes of grand cathedrals to the intricate designs of royal palaces, gold has left its mark on human history. As we look to the future, gold will likely continue to be a symbol of wealth, beauty, and enduring value. Its timeless allure is a testament to its unique place in our world. Let me tell you a story about a couple. Let's call them the Smiths. They were a loving couple who had spent decades together, building a life filled with memories and experiences. The Smiths, like many couples, were planning for their retirement. They knew that to enjoy their golden years, they needed to be financially secure. They had diligently saved and invested in a diversified portfolio of stocks and bonds. They attended financial planning seminars and sought advice from experts to ensure they were making the right decisions. However, they also decided to allocate a portion of their savings to physical gold. They had read about the benefits of investing in precious metals and coins and wanted to have a safety net for future economic destabilization. Years later, when the stock market experienced a downturn, the Smiths felt the impact. The economic landscape was changing, and their once stable investments were now fluctuating wildly. Their stock portfolio lost value, and they began to worry about their retirement plans. The uncertainty of the market made them anxious about their future. However, their gold investment provided a cushion. Unlike their stocks, the value of their gold remained stable, offering them a sense of security. Gold, known for its safe haven status, held its value during the market volatility. It acted as a buffer against the economic storm, giving the Smiths peace of mind. The Smith story underscores an important lesson. Gold can play a valuable role in a diversified investment portfolio, providing stability and a hedge against economic uncertainty. Their experience serves as a reminder that while no investment is without risk, having a balanced approach can help safeguard one's financial future. The Smiths were able to enjoy their retirement with less stress, knowing they had made wise choices in their investment strategy. The price of gold is influenced by a complex interplay of various factors. Understanding these factors is crucial for anyone looking to invest in gold wisely. While gold is considered a safe haven asset, its price can fluctuate significantly over time. Three primary forces drive these fluctuations: inflation, interest rates, and geopolitical events. Let's delve deeper into each of these critical factors. Inflation, the rate at which prices for goods and services rise, erodes the purchasing power of money. This means that over time, the same amount of money buys fewer goods and services. For example, a loaf of bread that cost $1 a few years ago might cost $2 today. When inflation is high, your money buys less. This can be particularly concerning for those on fixed incomes or with savings that do not keep pace with inflation. The value of their money diminishes, making it harder to afford everyday essentials. This is where gold comes in. Gold has been valued for centuries, not just for its beauty, but for its ability to preserve wealth. Gold is often seen as an inflation hedge. Investors turn to gold during times of economic uncertainty and rising prices because it tends to hold its value. This means that its value tends to rise during periods of high inflation. Historically, gold prices have surged when inflation rates are high, providing a buffer against the eroding value of paper money. Why? Because gold is a real asset with intrinsic value. Unlike stocks or bonds, which are financial assets, gold is a tangible asset that you can hold in your hand. Unlike paper currency, which can be printed endlessly by governments, gold's supply is limited. This scarcity is one of the reasons why gold retains its value over time. This makes it a store of value even when the purchasing power of fiat currencies diminishes. In times of economic instability, gold provides a sense of security and stability, making it a preferred choice for preserving wealth. Interest rates, a balancing act. Interest rates set by central banks also influence the price of gold. When interest rates rise, holding gold becomes less attractive. This is because gold doesn't pay interest like bonds or savings accounts. Investors may choose to park their money in interest-bearing assets when rates are high, reducing the demand for gold. Conversely, when interest rates are low, gold becomes more appealing as an investment. Geopolitical tensions fueling the demand for safe havens. Geopolitical events such as wars, political instability, or global pandemics can significantly impact financial markets, including the price of gold. During times of global uncertainty, investors often flock to safe haven assets like gold. This is because gold is seen as a store of value that is less susceptible to the whims of political decisions or market volatility. As a result, gold prices tend to rise when geopolitical tensions escalate. Technical analysis, charting the course of gold. Technical analysis is a tool used by traders to forecast future price movements based on historical data. It involves studying charts of past price action and volume to identify patterns and trends. While fundamental analysis focuses on the underlying factors driving an asset's value, technical analysis focuses on price movements. Traders use various technical indicators to identify potential buying or selling opportunities. Two commonly used indicators are moving averages and the relative strength index, or RSI. Current gold market outlook, a glimpse into recent trends. As of today, October 13th, 2024, the gold market presents a mixed picture. Gold prices have experienced some volatility in recent months. Factors such as inflation concerns, global interest rate hikes, and the ongoing geopolitical uncertainty have contributed to this fluctuation. It's essential to stay updated on the latest market news, economic data releases, and geopolitical developments to make informed investment decisions. Staying ahead of the curve. The importance of informed investing. Investing in gold, like any investment, requires careful consideration and a thorough understanding of the risks involved. Before making any investment decisions, it's crucial to conduct your due diligence and, if needed, seek advice from a qualified financial advisor. Remember, diversification is key. Never put all your eggs in one basket, especially when it comes to investments. In conclusion, navigating the golden path. Gold has been a store of value for centuries, and its allure endures. Understanding the factors that influence gold prices, from inflation and interest rates to geopolitical events, is essential for anyone considering adding this precious metal to their investment portfolio. As with all investments, knowledge is power. By staying informed, you can navigate the golden path with greater confidence and potentially reap the rewards of this timeless asset.